G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're going to take a look again at this section here of Bitcoin, and this is going to be a constructive video about how we can potentially navigate the next few days and next week or two for Bitcoin. Now, I'm not going to be nailing the point home and laboring the fact that we have been dipping. That's quite obvious. So this is going to be a very constructive video. What can we learn from what happened in 2017 and what can we do moving forward in 2021? All right, well, let's get stuck in. So first of all, what I've got on the screen here, this is a weekly Bitcoin chart going back to 2013. And again, we've seen this many times before. This is the 50-week moving average. Now, I've been keeping a really close eye on this particular MA because you can see we bounce off it in every cycle. We bounced off it here, we bounced off it here, we bounced off it here, and now we're heading very, very close towards it. And you can see when we do go through it, we don't recover until we end up bottoming out and resetting the cycle. So we've talked about this many times before. And I think now more than ever, if I zoom in to 2021, we can see that we are heading very close towards it. There's no getting away from the fact that we are most likely, from this point, going to go through it. So this here is a weekly chart, but what I want to do is have a look at the daily chart, and I want to zoom right into this 2017 section right here and compare it to what's happening in 2021, and also compare it to the Bitcoin dominance at that particular time and what the dominance was doing as we were dropping down closer to the 50-week moving average. All right, so what I've got on the screen right now is just that. This is a daily chart. So on the left-hand side of the screen, this is 2018. And on the right-hand side, this is 2021. So you'll notice here at the top of the rally, right here at the peak, this is in 2018, on the 5th of May, we peaked right here, around about the $10,000 mark for Bitcoin. And you can see that the Bitcoin dominance right on the 5th of May was right down here at the bottom, so around 40%, maybe even less than 40%, closer to 39% right here. And then as we started dipping, you can see we had a really strong dip, very similar to the dips we've had in recent days. But at this particular point here, on the 12th and 13th of May, we had this mini rally, these 2 green days, which sounds very familiar because we just had 2 green days right now on the 22nd and 23rd of September. Now, I'm not suggesting this is a one-to-one copy of what happened in 2018, but I'm just saying, let's have a look and see what happened back then to give us a bit of an indication of what we can expect, the type of price action and type of Bitcoin dominance we can expect. So you'll notice when we had that mini rally, those 2 green days on the 12th and 13th of May, let's have a look to see what the dominance did. And you can see that we had here these 2 red days for the dominance. So the dominance dropped as the rally occurred. Now, we've seen a very similar thing here. If you look on the 22nd and 23rd of September, when we had that mini rally, look at the dominance. We had this big red dominance candle going down. So the theory that the dominance goes down for Bitcoin when we have these mini rallies seems to be consistent this year and compared to what happened in 2018. So you can see in 2018, whenever we bottom after a decent dip, so right here we had several red days in a row. We only had like one little green day in a row there. Then we started to have a rally up to the 4th of June. And you'll notice that rally there. Here's the rally that right here in the Bitcoin dominance. You can see the dominance dropped as we had that rally. So essentially what we can look for going forward is whenever we have a decent drop, several red days in a row, we can expect maybe a rally of maybe 2 green days if we follow a similar pattern to what happened in 2018. You can see right here, 2 green days, and then we had 1, 2, 3, let's say 3 red days and a neutral day. Then we had a rally of 2 green days with a neutral day in between, and then red, 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 so 3 red. So it's essentially 2 green, 3 red, and with the odd neutral day in between. Now here is a potential bull trap that we may see again in 2021. So right here, leading up to the 4th of June back in 2018, you can see we had several green days in a row. They weren't that strong, but we had one big strong green day, we had a slight red day, then we had green, 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 green. We had another red day, then another green, green, green. So right here, this would have been a bull trap at that particular time. People would have been thinking, okay, we've hit the bottom. Now we're up and away. But what we have seen in the past, and I'll bring up this diagram again, you'll notice that whenever we do drop below that 50-week moving average, we never recover. In fact, we bottom out lower than where we started the bounce. Now, we've seen this before, but I'll just demonstrate it very, very quickly again. So this is where we bounced right here, and this is where we bottomed. You can see this is lower than that. And again, so right here, this is where we bounced. So if we follow a similar pattern, we should close somewhere below this point. Now, that was about $32,000. This here is a weekly chart. So we closed the week at $32,000. So we may close at, say, $30,000. We'll have to see how it plays out. But at least on a weekly scale, we bottom out after the bounce lower than where we bounced from. So with that information in mind, if we this is the point here that we bounced, and here is actually higher than where we bounced. And what we've seen in every other cycle is we've always gone lower compared to the point that we bounced from. So this here was a bull trap, and we may see this again in 2021, where we see some bullish momentum moving up after we've crossed through the 50-day moving average. But it's most likely that we end up closing at a point lower than where we started at $32,000 for the weekly close that we bounced off. So anyway, that's all for today's video. I hope you enjoyed the content. Please like and subscribe. You can follow me on Twitter at TechnicalTimCR1. And until next time, I'm Tim, and cheers.